Hello, 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 and welcome to The Hash, where we discuss the latest and greatest in crypto news and culture. I'm Benjamin Powers, and I've got my other wonderful co-hosts. We got Naomi Brockwell, Jen Sanasie, Nate DiCamillo, and Anna Batakova. Thank you all for being here today.
Absolutely. Glad to be here, Ben.
And so, Naomi, you've got our first story of the day. Take us on a little trip to the metals markets.
The metals markets. All right. So Jeff Curry, who's Goldman Sachs' head of commodities research, said that cryptocurrencies are not a substitute for gold when looking for an inflation hedge, but for copper, which is interesting. So Jeff was distinguishing between risk on and risk off assets. Basically, that means that if risk on means that it's correlated with stocks and growth. Risk off means that it's good to have during a recession or disaster. So he's suggesting that crypto actually acts more in correlation with stock markets in somewhat the same way that copper does, and is not quite the inflation hedge of gold that everyone touts it to be. So I'm going to actually throw this straight to Nate for your take on this. Would you agree with this assessment?
Yeah, this is something that a lot of analysts have talked about in terms of Bitcoin tracking with tech stocks more than, say, gold. Although I just say that gold isn't always a haven inflation hedge asset. It's not, because, like we had record CPI numbers in April, and both Bitcoin and gold dipped on the news while 10-year bonds rose on the news. I do think that both gold and Bitcoin, depending on what the narrative is around them, can both be seen as places to go to avoid larger risks in the economy, larger long-term risks. But it's an interesting take. I don't know anything about copper. That's why I'm like,
That was going to be my question. Can someone please let us know about copper?
Right,
yeah,
exactly. So.
Yeah, I mean, I agree, Nate, in that gold has recently been acting more like a risk-on asset. As you mentioned, it is dipping with stock market. So, I mean, I'm wondering what that's caused by as well. Is it just because, people are like, they've only got so many assets, right? And so they're choosing what to put it into, and they've really been exploring cryptocurrency recently. Is that why we haven't seen the big spike in gold that a lot of people would have guessed? Or is it because we're not in a recession right now? We're just kind of dealing with inflation. What are your thoughts on that?
Yeah, I don't know. That part of that is also because we're in a recession, the low interest rate environment, it makes it so that like anything that's very liquid and high yield is interesting to investors, which Bitcoin is, and gold is much. You have gold ETFs and whatnot, but gold overall seems to have a little less infrastructure around it.
Yeah,
it's funny actually that. It's funny that recently another report by JP Morgan said that there was a correlation in the movement, in the influence and outflows between the gold related trade exchange traded funds and Bitcoin exchange traded funds. And while institutional investors were not so eager to buy the dip on the Bitcoin market, they were flocking into the gold exchange traded funds, which is kind of ironic. While crypto has been waiting all this time, for institutional investors to drop gold. I'm now citing the famous advertising. It's actually been recently like dropping Bitcoin and buying gold, which might mean that, maybe there is some really strong correlation between Bitcoin and gold on the real market.
Yeah, I think that's such an interesting point. Sorry, go ahead, Ben.
No, I was just going to say, I think this really shows that a lot of assets and a lot of various economics behavior cannot be pegged to one thing, and they, perform in a variety of different ways, particularly as you have more people coming in and experimenting with cryptocurrencies and not just Bitcoin, right? So if you have people that are buying Bitcoin or investing in it, they see it as an asset, they're going to be treating it differently because they have different economic stimuli that you're dealing with. And as more variables kind of play out within the Bitcoin market itself, I think it's going to look less and less as just a singular entity, for example, a hedge against inflation, right? That's sort of how a lot of people saw it. But with more people in the market, it's not going to behave in that one-to-one manner that we might have been accustomed to. And I think it's going to be really interesting to track just how that happens, because I think that tells us a little bit more about who's buying Bitcoin than the people that were there maybe even, a few years ago.
Yeah, I completely agree with that. Go ahead, Anna.
Anna, did you want to say something? It was me. Okay.
Oh, sorry. I just sorry. I totally lost track of this.
We're just all over the
place. Yeah, you sound exactly the same. Go ahead, Jen.
So we saw institutional investors kind of pile into Bitcoin at the beginning of the year, and Nate, I wanted to get your opinion. Do you think that the dip has spooked a lot of those institutional investors? What do you think is happening there?
That's an interesting question. I don't know that it's necessarily the dip has spooked institutional investors. A lot of the same, you saw the PwC report with hedge funds still showing the same amount of interest and that sort of thing. And we've written about more firms looking at different, like JP Morgan, looking at adding funds to get in. So I think that's something where the institutional investors definitely in this recent correction got to profit a lot off of recent news, but that remains to be seen. The next up, I have we're going to talk a little bit about China and their new policy. So China used to have a 1 to 2 child policy, and now they have they're upping it to 3 children per family. And the reason why this matters is it's China trying to beat what is a coming baby bust. So for background, an aging population has long presented challenges for China's their saving and export heavy economic model. So the decline in China's birth rate kind of threatens to disrupt their goal to transform the nation to a prosperous consumer society and a global tech leader. So what does this have to do with Bitcoin? Well, this is a labor shortage could produce inflation for some of the labor-intensive goods that come out of China. China is very export heavy, and it looks like unless they advance in automation significantly or technology significantly or increase their population, that export heavy economy, the prices in that economy are going to have a lot of upward pressure as their labor force shrinks. So I was curious to know, so now we're back to kind of what we started at the show with, Bitcoiners often think of digital assets as an inflation hedge. So I wanted to toss it to the group. Has that narrative held up as it being an inflation hedge? And is this looming kind of inflation in the broader economy an opportunity for Bitcoin and other digital assets?
I mean, I think it points to, in part, why there's an appetite for it. I'm thinking about this in the context of China. This is really interesting. This is a relaxing of an incredibly strict and onerous kind of policy in terms of limiting the number of children you can have. But I think also we're seeing this in other Western countries as well too. I believe the U.S. birth rate is it's not increasing nearly as much as it once was. Younger generations are kind of putting children on hold in some ways. We see parts of the EU also declining overall in birth rates, and something that I think is similar there, and we see in kind of this reporting on China is people in China, at least in some of the articles, they were saying no, I'm probably not going to have more kids. In fact, because it's so expensive to do so. There's a lack of, childcare. They rely on their parents to do that. And to me, that sort of tracks with, like, in the US, people looking at, their economic kind of viability, and where you have like a minimum wage that's not pegged to inflation, for example, and people just don't have the money to keep having kids and paying for them. And that lack of economic opportunity, I think, is something that really does point to the weaknesses in existing systems and the reason why there is an attractiveness for crypto. So while we think about it as like a hedge against inflation, but we also just talked about how that narrative is shifting slightly, I think the options that are out there just aren't looking great for people. And we're seeing that kind of repercussions, like in a very interesting ripple effect take hold, and particularly maybe, in relation to this story in China as well.
Ben, I just want to add to what you were. Sorry, Naomi, go for it. I'll go after.
No, you go ahead, Jen. I'll go after.
Okay. All right. I was just gonna. I wanted to add to what you were saying, Ben. The labor force across the world is not only trying to have children or trying to care for their children, but they also have elderly parents that they are, especially in China, also taking care of. And we talk about crypto as a hedge for inflation, and it just feels like right now, especially with all the regulatory concerns happening, people are just kind of like stuck. They don't know what to do. Crypto is it feels like a great option, but we speak on the show a lot about regulation and deterring people from doing things that are essentially illegal. And so now I feel like people are feeling lost. But Naomi, I'll kick.
I think it feels like this isn't a hedge against inflation. It's like a hedge against everything, right? Like this past year has been chaotic, let's say, to say the least, but there's so much uncertainty. And then there's like so much, there's obstacles to institutional investing. We talk about this all the time, right? And so if people are trying to like get ahead in life, there just seems to be so few options that I think crypto is really appealing in that one. But Naomi, I want to toss this up to you to get your thoughts.
Yeah, I think there are a lot of things coming to a head, as you said, and especially, the fact that the population across the globe, like this is a worldwide phenomenon, people not having children. Japan, it's been a really long time that this has been going on, and other countries are catching up now. And what happens when you have a substantially elderly population? Most of the medical care that you get in your life, like 90% of it happens in the last 10 years of your life or something. I think the statistic is. So it's really profound. And when you have their big social welfare programs, how a government's going to be funding those? And we've got to be thinking about that. So obviously there's going to have to be a lot of money being printed, because if there are fewer and fewer younger people to support all of the elderly, you just don't have enough money, no matter how much you tax people, to cover all of that. So I think a lot of people are cognizant of that. I think a lot of people are looking for hedges, and they do see inflation that has already begun. And so they're starting to look for things. But to your initial question, Nate, yes, I do think that even though it's an on-risk asset, Bitcoin, as the volatility starts to, calm down, it's a new asset. I think people are still getting spooked, as Jen mentioned, by these dips. But I think that as it gets older and more mature, it is going to move more to an off-risk asset, in the same way that gold is. We've already started to see that transition. I think more and more people are buying into it, and the narrative is only continuing. It's becoming this consensus that yes, cryptocurrency is something, and Bitcoin in particular is something you can put your money into, and it's not going to be inflated away as the governments just print astounding amounts of money. So definitely something to keep an eye on. And I do think people are lost right now. They're looking for options, ways to safeguard their wealth, as you said, Jen. It's brutal times, and we may be excited about conferences and Bitcoin prices going up, but value of fiat currency is going down. It's going to hurt a lot of people, and people are just looking to not be completely destroyed. But let's go to a tease now. Up after the break, we're going to be talking about why Dogecoin is rallying today, and we'll have some fun things to show you regarding that. But we'll talk about that after the break, coming up soon.
and welcome back to The Hash, where we bring you the latest and greatest in crypto and culture. So right now we have the Doge chart on the screen here. You can see in the past 24 hours, it's up 32%. So it's rallying big time. And that could be based on some news that came out today. So Coinbase has listed Doge on its professional trading platform. They announced via a blog that users could transfer Doge into their professional accounts on Thursday if liquidity conditions are met. So that is causing the charts to rally, and also Elon to tweet. Ben, I'm going to kick it right down to you. And I posted this story this morning. You had a fun tweet to share with us.
Yeah, Elon jumped into the mentions on this one and sort of posted the Doge meme that essentially shows the approaching cloud of dust that is the Dogecoin standard coming for the global financial system. Nick Day, who I believe wrote this article, had to welcome his 250 new followers based solely off Elon responding that, in fact, this was not a Dogecoin account, and he reports on regulatory matters for the most part, and also sometimes trains. But I digress. I think that, in regards to this story, at least, this is something that is to be a little bit expected. I think this news has been kind of percolating for a while. Obviously, the Dogecoin, pack was waiting for it. And this is something that is going to be boosted as sort of exchanges seem to give it legitimacy, right? That's really what this is all about, is sort of these exchanges listing to it opening up to a bigger marketplace. And also, Coinbase obviously had a closely watched direct listing earlier this year, and so is seen as one of the big sort of crypto proxy stocks out there in the world. So given the fact that they listed, I don't think a price increase was unexpected at all here. We'll see what other exchanges might follow suit. But to me, this is just sort of the way that these markets have traditionally responded when certain coins get listed on exchanges. It's seen as sort of like a stamp of approval in some ways.
Now, I have to keep asking this question. When are we going to take Doge seriously?
Doge isn't meant to be taken seriously, Jen. You got it all wrong.
But when?
No, even if we take it seriously, we're not going to take it seriously. Come on. Doge is about joy and about fun and not taking things seriously and about subjective value and why are people buying this. But it is about having a laugh as well. Another Elon tweet happened this morning. He posted a picture of a Doge in front of a computer. He's like, found this picture of me as a child. And it's from 1980. I have to keep my passion hidden from the public or I'll be socially ostracized. It's just, it's all about having fun and diving into these memes with Dogecoin. So yes, they may be on Coinbase Pro. You may be able to trade it legitimately now. But I do think that there is just a lot of fun around this that I don't see going away anytime soon. But I'll throw this to you, Nate.
Yeah, I agree. I think that this is also kind of a shift in how Coinbase also looks at sometimes at listing coins. They are. This was the first question on the latest earnings call was, when are you going to list Dogecoin? and Brian Armstrong was like 6 to 8 weeks. And so this is kind of the him following through on that. But also it was a huge deal when back in the day when Coinbase listed Ethereum. And so now it's interesting to see how fast that exchange has moved in terms of how quickly they'll accept coins now when the market wants it. Probably because of they've already established this dominance in order these relationships with regulators. We already saw, the story in the Washington Post about White House officials talking about crypto and trying to figure out how they can let consumers Dogecoin to their heart's content, while also having consumer protections in place.
Nate, do you think this is all related?
Actually a very ironic.
No, okay, go ahead.
Sorry, Ben. Just for jumping in to say that it really sounds like a very ironic combination of words. That Coinbase Pro, which is meant like a professional trading platform, listed Dogecoin. But to Naomi's point that Dogecoin is not meant to be considered as a serious investment, some people do though. And there are some extremely popular social media accounts. For example, there is a YouTube personality called Dogecoin Millionaire with really a lot of followers who basically said, I think it was a couple of weeks ago, and the New York Times even profiled him personally, that he, in February, at sometime in February, he basically exited all of his investment position. Like, he sold his stocks, whatever, and he went all in Dogecoin. Like, the guy invested about $100,000 in Dogecoin.
Oh my god!
And he was really serious. Like, I mean, like, he was like really, he sounded like really serious about explaining to his followers, like, guys, this is going to be big. We have Elon Musk behind this thing. So, like, yeah, like, we are having fun watching all these Dogecoin fluctuations and like Elon Musk moves and memes and whatever. But there are people out there that might be taking this seriously and believing, like, watching all this, you know, like some chains, some companies said that they're going to accept Dogecoin as payments. Some people do take it seriously and say, hey, are these going to be the new Bitcoin, like the next big thing? So,
well, it's not. I think that, I will never take it seriously enough to invest $100,000 in it. That's just my kind of take personally. But in the sense of like traders and it being having access to it, I think that makes more sense than it being like an investment vehicle for a variety of ways, right? Like, traders are looking for those small like profit margins they can make, so they can just flip different coins back and forth and move things around. And so in that case, kind of how Doge rises and falls quite dramatically, I guess giving access to traders on this platform, that to me makes more sense than somebody trying to like park their life savings in it. But thinking about things that are a little bit more serious, I'm bringing some privacy news to the table today. And essentially, Alibaba's huge browser business, one of which is UC Web, one of its subsidiaries, and by some measures, the fourth largest browser in the world. It was revealed today by Forbes that, in fact, they are not a privacy browser as they are kind of pitched. So for US readers and kind of viewers, we might not be so familiar with this web portal. It's particularly popular in China, but it is a huge one and is sort of pitched as like an incognito mode for the web. Unfortunately, security researchers found that that was not the case, and browsing histories and other kind of fingerprinting data was being sent back not just to UC Web's servers, but also to Alibaba servers in China's mainland. So I think this is another kind of interesting data point as we see sort of this burgeoning privacy space as it gains more importance. It just shows that just because somebody's pitching this thing as private does not mean it is actually private. But Naomi, as my fellow kind of privacy advocate on the panel, I want to toss this one to you for initial reactions.
Yeah, I think that that's such a good point where, we're looking at today's world where privacy is coming more to a fore in people's mindsets, which is great. But that also means that privacy is being used as a buzzword in terms of marketing ploys, and people are throwing around words like encryption. And there was that big scandal recently, with Zoom, where they were saying, oh yeah, it's end-to-end encryption, but they just redefined end-to-end encryption to mean something completely different to what the InfoSec community actually defines as end-to-end encryption. Yeah. So, there are all these kind of like, slippery slopes in the privacy world when it comes to marketing. And I just think you need to be really careful out there. It is difficult for the layman to understand what they're actually getting when they think they're buying a privacy product. And so it's really helpful just to have privacy-focused companies out there that are educating people about this, not just putting out products and saying, this is the most private phone ever. This is the most private browser. Like, actually teaching people, what's important, what's to look for. Some great resources that I would encourage people to look at. Freedom of the Press Foundation. You have Snowden as the president of that. They put out some amazing resources where they teach people about what's actually a good VPN, what's just probably harvesting your data and selling it to advertisers, all of that sort of stuff. So I'd recommend people dive into those details. But I'll throw it to you, Jen. What are your thoughts on this article? And do you think the mainstream population really understands how much their privacy is being violated, even when they use things like incognito mode on browsers like this?
Yeah, well, there was some nice imagery in that article of someone taking your information and putting it into a suitcase and just running away. And I think that if it doesn't hit home for you, I don't know what will. I think when the everyday person is using the internet, I don't think that they know that there are as many bad actors or people who want their information out there as there are. I think a lot of people just take things at face value. You say that this is an incognito browser, so I'm going to use the browser, and I'm probably not going to think much more about it. On that note, Ben, I wanted you to kind of explain how this browsing history can contribute to digital fingerprinting so that people can understand how this information can be used against them.
Sure. I think that, what I've been thinking of, and particularly in relation to this article, but one of the, all the different privacy articles and security articles that I read and think about is I was talking with Zuko Wilcox, I think it was last year when I was working on a big kind of like future of the internet piece. And he likened it to, look, like the web was not built for privacy. He kind of said it's essentially like a leaky bucket that has like 15, 30, 50, however many holes you want in it. And there's just kind of information spilling out of all of these things. And so, Naomi, to your point again, right, there is no panacea for privacy. You're not going to be able to probably plug all of those holes simultaneously with one thing, but you can like use discrete tools to stop certain information flows from getting out there. And in regards to kind of this, like browsing histories are incredibly important. They really show like your behavior. It shows like what you were looking at. It shows what you're thinking about buying. It shows, what information you're consuming. It shows maybe what sort of dissent you're fomenting in some countries. Particularly, I think, if we look at the ways that digital crackdowns happen in countries like China around like the Great Firewall and other things. And so, we spend so much of our lives online that increasingly like that's a better behavioral kind of fingerprint than maybe some of the things we actually do IRL. So that's kind of how I think about this one. I do think too, it points to some of the issues around like centralized entities versus decentralization, right? Naomi, you spoke about VPNs and those sorts of things. And there are various like DVPN products, decentralized VPNs that don't hold those centralized repositories of data that they could, market off the back end to advertisers, right? And in looking at any of this, I think it's really, really important that, people think about it and they also look like the business models, right? Like what is the way that this company is going to be making money and how might your data be sort of implicated in that? But Naomi, I'll toss it right back to you.
Yeah, I'll just mention that when you're dealing with companies like this, where there's such an egregious breaking of trust, where they're advertising something and not delivering it, you're not always going to get like repercussions from government either. So don't expect that, because in a lot of cases, it's the government that's actually enabling this and wanting them to put in these back doors and get the data. I mean, that's what governments do. They want to collect as much information as possible. I wouldn't be surprised if Beijing, mandated that Alibaba do this. I think that Alibaba is under the thumb of the government in particular right now, especially after their IPO was cancelled. And then you had the head just kind of go missing for a while and no one's really heard from Jack Ma. And so I think that, there are probably a lot of things that they make these tech companies do in terms of collecting information. But Anna, I'll throw this to you.
Yeah, I just wanted to say I very, very much resonated with the thesis that Ben said that internet is actually a leaky bucket of data. And, I don't think that any country is actually immune to that. The mentioned Snowden revealed that some really massive things have been happening in the US as well. So given that most people actually have no capacity to check how actually privacy protecting are those tools that they're using, like I cannot go into the code of my web browser or whatever app I'm using and see what's going on with my data via the code. So probably the best rule for anyone who wants to protect their privacy is, just watch what you share. Nothing is 100 private. Nothing is 100 protected on the internet. If your data is on the internet, be prepared for it to be leaked or stolen.
Yeah, I would add to that. I mean, I push back against the self-censorship idea. Like, I understand completely what you're saying. Do be careful with what you're doing, but I don't want to see a world where people have to tread on eggshells because everything they're doing online is, being leaked. I would rather see a world where people are just embracing the privacy products and the companies who are trying their best to give us better privacy and decentralized tools. I think the more support we can give these people, the better, we'll be as a society as a whole. So we won't have to, self-censor in that regard. But a lot to think about. Let's move on to the next topic there. Anna, I believe I'm handing it back to you.
Yeah, in a different kind of the world, some other interesting things are happening. The Palestinian militant group Hamas has seen a surge in cryptocurrency donations since the start of the new escalation in Gaza, when Israel and Palestine shot some rockets against each other, and a lot of civilians died. And this is actually a very complex situation in the region right now. So Hamas has been repeatedly fundraising through crypto. It's been tweeting, and it's been tweeting Bitcoin addresses and publishing it on Telegram groups, which all now are censored. But anyway, and an unnamed Hamas official reportedly talked to the Wall Street Journal and said, quote, "There was definitely a spike," meaning in the crypto donations. "Some of the money gets used for military purposes to defend the basic rights of the Palestinians." So it's the stories like that are exactly the reason why the governments of the world and the regulators are so skeptic and critical about crypto. I wonder what you guys are thinking about all this.
Yeah, I'll jump in there. I mean, when we're talking about things like Bitcoin, they're uncensorable money, and they're neutral tools, right? These aren't tools that just give, the people you like freedom. These are tools that enable freedom for everyone. And so anyone can participate in this global financial system, which is super interesting. And I'm a big fan of people just, being able to access their own money and being able to make their own choices regarding money. But obviously there are trade-offs with that we do have to be aware of as a society. I think the narrative, especially in the crypto movement, it tends to be very, rose-colored glasses. We'll move into this decentralized future and all of our problems will be solved, right? That's just not it. They'll just be different problems. And people will argue that, decentralized problems are just better than state actor problems, right? You don't want centralized power because they can, just afflict more damage. They can create more harm. They can kill more people. It's better if we can decentralize power and a lot less harm can be created. But I think people do need to be more cognizant that it's not going to be a panacea. It's not going to be something that makes life this utopia. It's just going to give people back more freedom. And that's just a principle that a lot of the crypto community really feels very strongly about. But I'll throw this to you, Nate. What are your thoughts on all this?
Yeah, I agree with you, Naomi. I think that there are, whenever I'm talking with friends about crypto, and they'll bring up issues around what about like illicit finance? What about terrorist financing? And then there's also, what about dissidents who are like protesting against like an authoritarian regime, though, or sex workers, or people who are working and in a vulnerable occupation. So it is truly it's a tool that can be used for very terrible things, as well as ways and things that allow people to do things that to have their own independence and own individual freedom.
And by the way, ironically, exactly in regions like Palestine, there are people who are, not terrorists, not aggressive, just peaceful civilians who might need some uncensorable, borderless financial tools more than anyone, because talking about Palestine, some people, including civilians, having trouble getting money from abroad in any form. And our colleague Sandali Handegama recently reported that, for example, Venmo was delaying transactions that contained the words Palestine or Palestinian, or any terms including emergency funds combined. So it's important to have this tool, even for territories where complex political stuff is happening. And it just not seems to be getting any easier to decide, to take it black or white.
Yeah, I think this is sort of a continuation of a narrative that we've seen in a couple of different instances. We've talked on this show previously about how the Iranian government was trying to look at Bitcoin and crypto as a maybe way to circumvent sanctions that the U.S. has placed there. The U.S. has also placed sanctions against Hamas and a number of other countries and political organizations. And I think that, as well as like North Korea, among others, and we see all of these sorts of either countries or political organizations like Hamas using crypto as a way to circumvent sort of like hegemonic sanctions laid out by the US and other kind of large bloc actors. And to me, that's just a really interesting development, because we talk about, sort of crypto as this peer-to-peer aspect, and sort of anybody can send money anywhere to anyone. And once countries start to see it as a way to circumvent the existing financial system, I just think that could spur a whole lot of either regulatory reactions, but also just generally like having countries sort of function as individuals in this space is just really, really interesting to me, and shows how like messy that dynamic of state versus non-state economics is becoming, and how those two worlds are starting to interact with each other. So this is another data point, and that one is perhaps unsurprising in a variety of ways, but this is a narrative that isn't going away. It's a story that's going to keep happening, and how we cover it and how the world reacts, I think is going to be really, really fascinating.
Absolutely. Well, we are going to wrap up there. This has been another episode of The Hash. Thank you so much, everyone, for joining us. Thank you to Nate and Anna for joining us on the show as well today. That's been super awesome. And if you wanted to hang around at 3 p.m., we will be hearing from Christine Lee on CoinDesk TV, so stick around for that. But otherwise, go and enjoy the rest of your day, everyone, and have a great time. See you later.
All right. See you tomorrow.